to me, like, it is a little concerning that like the count overall has been going down. And the reason this is so like important to me, like existentially important to me, is because the old people that buy Bitcoin, right, will always buy Bitcoin if they know that eventually young people are going to buy it, because that's kind of the ultimate reflexivity built into the thesis of Bitcoin. The old want to buy it because the young love it and they want to participate in that wealth transfer. But the young people will not buy if only the old people are buying. They will not participate in that. They are going to opt out. And the worrying trend here is
What's going on, guys? Today we got a great conversation with Jeff Park. Jeff is the Chief Investment Officer and Partner at ProCap BTC. In this conversation, we got some real talk for you. We explain why Bitcoin's price is going down. Is Bitcoin losing interest from young people? What's going on in the market? Where are new buyers going to come from? Why is sentiment changing so much? How to think about things like interest rates and the macro economy, but also the micro economy affecting Bitcoin's price. And then, of course, we go ahead and we talk about Scott Bessent putting out a tweet about Bitcoin. And is that actually a sign that maybe there's been a shift in the market? All that and much more in today's conversation with Jeff Park. All right, Jeff, I thought a great place to start the conversation. Bitcoin's price has not only been going sideways, it's been going down, recently touched $101,000. This is not a fun bull market. Everyone thinks Q4, I think average return over the last like 8 to 10 years is something like 60%. These are huge numbers people are expecting. And as we know, unhappiness is the difference between expectations and reality. And right now that is a big gap, which is why people are so upset online. What's going on? Why is Bitcoin not going up?
Man, I'm so sympathetic to the online community. I feel the same pain. Q4 is generally a very good time for crypto for all kinds of reasons. And of course, right now it hasn't proven to be the case, especially for October's historically having been a strong month. I think there's a confluence of factors. There's the macro, there's the micro, and there's of course always the truth, which is that this is always driven by structured supply and buying, and what are the dynamics there that we can appreciate and discern from. So, I would say like on the micro front, we have to remember October, we did go through a huge liquidation, right? It was the largest liquidation. I do think there are parts of that story to which there's still being recoveries made on certain accounts and exchanges as to how they're thinking about navigating this aspect of it. So
like people are like licking their wounds because of that.
Yeah. There's definitely wealth destruction, but there's also elements of like, the infrastructure to which people still have some views that it might not be safe for risk-taking endeavors in case there's, dead bodies that are floating that we just don't know yet. And we're seeing some of those types of activities play out, right? Because just in last week, we saw one of the large DeFi exploits happening in Balancer. Balancer is one of the most well-known multi-asset AMM pools that's been around for a long time. To see an exploit on Balancer where hundreds of millions of dollars of capital is now gone is historically the kind of thing people used to make a bigger deal out of, but right now there's so many of these kinds of things that it's all getting lost and muddied. There was another one, Stream Finance, earlier this week that also got affected. That touches a lot of different protocols as well. Blue chip projects like Morpho and others that are participant of that stablecoin ecosystem. So that's another $100 million that's been affected. I think just before we got in here, there was another DeFi called Moonwell that was exploited. So we're talking about DeFi exploitations that are still coming through, which always hurts sentiment in crypto. This is the kind of dynamic where at the micro level, people just want to be risk off. And then on top of that, you add the macro level to which we're seeing some jittery behavior in the global capital markets. The way in which I think the Fed turned on there being an end to QT was telegraphed, but still slightly abrupt. I think there was kind of implications it would stop by December, but the way in which it happened was, I think, still catching some people a little bit off guard. And then you add on top of that, December rate cut being now back in play, for which there may not be a follow through. The combination of both of those levers creates a lot of uncertainty for what to expect on the macro front. And there's obviously some signs of liquidity issues, which is why they're accelerating the end of QT. So there's some general kind of unease on that spectrum as well. But most importantly, I think you are seeing general kind of exhaustion by new investors where the expectation of their price gains are not materializing because of the continued selling that is happening nonetheless in the space. So the one amazing thing about Bitcoin is that because it is on chain, you can track a lot of these analytics. And the ETFs do now kind of change that a little bit. They do muddy the picture because ETFs don't have the same on-chain footprint. But by and large, when it comes to very small checks and very large checks, those are still on chain and you can see it. And the kind of unnerving thing that's historically always been true is that if you combine the Bitcoin that is owned by what you call whales and then the humpback whales that are like in the 1,000, 10,000 BTC plus type category, those cohorts still control roughly a third of the 20 million Bitcoin in existence today. We're talking about $6 to $7 million of Bitcoin controlled by these very large accounts. When you compare that to the very small, shrimp accounts, as people call them, or crab accounts, which are like below 1 Bitcoin or between 1 and 10 Bitcoin, those are minorities. Those are still like 4 million Bitcoins in aggregate. So they're like less than half of the whales. That market structure is extremely lopsided, in which big sellers can clearly move markets pretty quickly. And the truth is that these whales have been selling consistently, not shortly, but for a long period of time. If you look at their on-chain footprint from 2022, they've been consistently liquidating. And what you're seeing is that for the first time with the ETFs having launched, the smaller accounts are also no longer buying on chain. So the other really kind of shocking thing you can see is when you look at the shrimp accounts or the crab accounts, they're consistently buying Bitcoin little by little, accumulating until about 2024. And then it stops. And then what you saw the last year and a half is it is actually going down. And to me, that is a little bit worrying because it's one thing for it to maybe not go up as much as used to because people are choosing the ETFs. But it is not great when it's going down, because that also means that there's certain small, young accounts that are also choosing not to be invested.
Do you think it's because they're going from on-chain buying to buying an ETF or, some other mechanism? So like they're still buying, it's just now being pushed behind the curtain? Or no?
So that was kind of my original hypothesis. And I still think there's some of that substitution effect going on because you can see that trend with kind of the accounts that are in between between the whales and the shrimps, right? You can see there's a gradual increase. I think it's up to like $100 million of Bitcoin where those wallet accounts are accumulating more. Those are clearly ETF activities. However, the reason I don't know if that's enough is because if I were a young person, I still think young people choose to own coins. Fundamentally, I'm not talking about advisors. I'm not talking about Wall Street professionals that are like 35, 40, 45 plus. I'm talking about like 20-year-olds and young 30-year-olds who are really getting into crypto and they care a lot about the way they own those exposures. I look at that cohort generally to be those that are opening Coinbase accounts and buying Bitcoin, especially if it's like below 1 Bitcoin in size. We're talking about less than 100 grand. Like those accounts, I think still, if they were young demographics that were interested in exploring, would choose to go on chain. That's my belief, at least, because young people still care about the ethos and meaning of what it means to be in crypto for that social participation. They're not the ones that go around talking about, oh yeah, I own my crypto exposure through an ETF, like as if that's a proud thing. So to me, like it is a little concerning that like the count overall has been going down. And the reason this is so like important to me, like existentially important to me, is because the old people that buy Bitcoin, right, will always buy Bitcoin if they know that eventually young people are going to buy it, because that's kind of the ultimate reflexivity built into the thesis of Bitcoin. The old want to buy it because the young love it and they want to participate in that wealth transfer. But the young people will not buy if only the old people are buying. They will not participate in that. They are going to opt out. And the worrying trend here is if young people stop buying Bitcoin because they're no longer interested, whether because it's not volatile anymore, whether the price action is not interesting anymore, whether it's because there's so many other options to do, like betting on prediction markets, for example, I think is a huge competitor to Bitcoin interest. All of those things compete for attention. And if young people choose to kind of step out, then we have a real problem.
So to me, there's two things going on. Let's first talk about like the fracturing of energy, attention, and capital, which there are things that are competing for attention and capital in the Bitcoin industry, and then there are things outside of it. So for example, I can buy the coins, I can buy the ETF, I can buy the digital asset treasury companies, I can buy a whole bunch of different types of exposures. I can buy Coinbase stock, right? There's now kind of a little bit of an ecosystem there as to, okay, I want to put exposure on. How do I get the exposure? Then there are things outside, which include the prediction markets, artificial intelligence. I 100% think people are not only saying, hey, let me convert some of my Bitcoin stuff to AI, but there's a lot of people who are saying, I'm not going to put another dollar into this Bitcoin thing because I'm going to, on a zero-sum basis, put it actually into an AI company, hyperscaler, whatever. So what would give you confidence or, kind of maybe calm your concern as you see more opportunities? Because like there is more access to the market, is a good thing. But it sounds like maybe you're a little bit more skeptical that this is a short-term thing. It could be like a longer-term trend to really pay attention to.
Look, I think thesis can change really quickly based on price action. That's always been the case with Bitcoin, that generally attention and interest comes back when it does perform. And so you always have to kind of hedge out a little bit of that path dependency. But it is absolutely the case that there's more alternative options for investing for upside than historically there has been because of the abundant growth that we're experiencing otherwise in the broad economy. So AI and Bitcoin are basically different sides of the exact same coin, in my opinion, because it's all about energy and computation. So if you want to diversify a thesis that is not just going to be played out through Bitcoin ownership, but also through the actual infrastructure via these data centers, then I think it makes sense that people might want to invest in that fashion, especially if you think there's going to be more support coming at the macro level, at the sovereign level for these players. There's some structural tailwinds here. I think many are quick to call this AI thing a bubble, but I think those who are observing it pretty carefully see all the things in place where the structure is going to last a lot longer than we think. And in that sense, like Bitcoin's in this weird stage where, in my opinion, it's a barbell thesis. On one hand, it's truly cypherpunk money and entirely resistant to sovereign manipulation and therefore is of merit from that foundation. On the other hand, you get something that is like so supported by institutional support and by sovereign nature, in which like it becomes part of the global monetary system that pushes it. But it has to kind of pick a lane. And Bitcoin right now is kind of in the middle because it's not really acting like cypherpunk money in the way that there hasn't been enough ecosystem development for Bitcoin to be really useful. And yet you're seeing US governments participate in promoting this space, but then not necessarily going all the way, right? It almost sometimes feels like a little bit of like a showmanship of like populism, but they're not doing anything. So you're caught in this middle where like, what do you stand for? Whereas at least with AI companies, we know this is like a national strategic importance of like sovereignty itself. If we're thinking that there's going to be financial warfare happening through these lens. So there's US government support. When you see things like White House Asset Management going out to buy these crypto equity, these data center companies, like, there's structural bids, but we don't see the same level of structural bid for Bitcoin, at least from that lens. And so I think young people are just trying to figure out like, what is it that's going to perform? Because above all, I really think young people want two things. They want a real sense of meaning in what they invest in. They've always cared about meaning, right? It's sometimes been to the point of it being detrimental to making it return concessionary. That's what the ESG movement ultimately was about. And then the second thing is they want to make money. And when you can't win on both fronts, Bitcoin starts to lose a little bit of that luster. And I think there is some of that happening where we're in this awkward phase of like, yeah, institutionalized Bitcoin, let's go. But like, what does that mean? What exactly is that going to mean for the actual ecosystem?
Today's episode is brought to you by Bitcoin IRA. Are you a crypto investor with a retirement account, but don't have any crypto in your retirement account? Listen up, this is for you. Bitcoin IRA is revolutionizing the way Americans save for retirement by helping smart investors diversify their savings with access to over 75 cryptocurrencies. With world-class customer service, military-grade encryption, and a vertically integrated licensed trust company, it's no wonder more than 200,000 Americans trust Bitcoin IRA to secure their financial future. Get started. It is quick and easy. It takes just 3 minutes to open an account. Once you're set up, their team of IRA specialists will reach out to guide you through every step of the process. Whether you're transferring an IRA from a legacy bank, rolling over an old 401k, or starting fresh with a new contribution, the Bitcoin IRA team is here to help you get access to real crypto in your retirement account. And here is the best part. As a Pomp podcast listener, you can earn up to $1,000 in rewards when you add funds to your account. Search for Bitcoin IRA today in the App Store or visit bitcoinira.com/pomp to join 200,000 Americans on their journey to upgrade their retirement. That's bitcoinira.com/pomp to upgrade your retirement today. There's another thing I've always thought, which is millennials. I think you and I are almost the exact same age. We were old enough to know what was happening during the global financial crisis, but we were not wealthy or had enough assets to really be hurt by it. And it was almost the psychological impact was like creating what we today would call a Bitcoiner at the time. And, people knew the, Occupy Wall Street movement was going on. Even if you weren't there with, the sign and protesting, there was an element of kind of a generational thing of like, man, do these people really screw a generation? Do they really, do this? And I wonder how much of that feeling is actually shared by Gen Z. It's just that millennials took the opportunity to express the view, like the release valve was Bitcoin. And actually Gen Z, it's like a political socialism type thing. And they're actually saying the same thing. The system isn't working for me. One was pointed at purely the financial system. The other is pointed actually at like a societal system where finance is a piece of it, but it actually is going after, a bunch of other things. Because I do think a lot of millennials, and again, this is like a gross generalization, but most millennials I know, their unhappiness, their issues, it's actually with the financial system. It's, hey, I can't afford a home because of interest rates or because of, inflation or whatever the thing is. I don't actually hear that many millennials talking about the same talking points as like the Gen Zers who theirs is almost like a more like political thing that is finance plus everything else. Does that resonate?
Yeah, no, it absolutely does. You know how there's that category, I forget the exact name for it, but it's like rich, but not rich enough or whatever that people make fun of. Like it's kind of like the hell position of living.
The $5,000 Rolex, not the $50,000.
Yeah.
Right?
Yeah. It's like you have enough money just to feel like you're part of it, but like not enough to really be comfortably feeling like you're sharing its success within it. And like
we call that first class, not private jet money.
Yes.
Right.
That's the me I'm thinking of. Maybe a notch below though. But millennials as a generation, I think kind of fit that category because we were, in fact, to your point, like young to have experienced the crisis, but not totally detached from it at the moment where we were able to like live parts of it through and through. So we have like an ability to appreciate what debasement is and how we feel like that is the core thing we can solve for. But when you go one generation below, like I actually don't think they care about debasement. Like when I talk to young people, like we're talking about like Gen Zs and Gen Alpha now, they are at that stage where like that is just not interesting to them, nor do they actually have any like sense of ownership to solving that problem.
You know what I think of? Do you remember the first time you ever learned about C-SPAN? Like, like the TV channel, right? Sure. And it's like, and maybe like your parents or grandparents, like somebody you knew in your neighborhood, whatever, somebody watched C-SPAN and you're like, that is like old people thing. I kind of feel like a lot of the hardcore finance stuff is the C-SPAN for Gen Z or Gen Alpha. They're like, they know about it, but they're just like not interested whatsoever.
Yeah, no, I don't blame them though, because how much of millennials do we even have delusion with each other, right? We talk about like, let's solve Social Security, but like we go home and at night we know like, oh, it's not going to be solved, right? Like why do we pretend like this is a thing that we feel like there's a hope scheme for? Ever. So I think like each generation successively sees the truth more and more. So like Gen Z's like truly, I don't think care about debasement. They're like, it's already screwed up. We're all screwed up together. Like it's not our fight. And we're just going to be happy and do our own thing and find meaning in things that like make us feel like we have a sense of belonging and community. And I think that's largely the rise of some level of that populism. But Bitcoin too, like this is where I feel like Bitcoin can still win, because if Bitcoin was able to appeal to its original mission as cypherpunk money, which I truly think lost a little bit of that luster, unfortunately, in the mainstream adoption via kind of the Wall Street financialization, but also the sovereign embrace. It is, in some sense, what young people really should care about, right? They do care about sovereignty and being tech fluent and actually thinking about privacy and all these things that they have a higher burden than millennials do, right? That's a great example of something where we grew up in the age of Facebook having been unleashed, like we were either in high school or college or at your first job. And we take it for granted that like, oh yeah, we just give away our privacy. Like that's a part of the social contract in which we have a happy life. The young people, they're much more aware of that trade-off. Like they are much more able to see about how they monetize the data that they're otherwise giving away for free, or they choose to actually not give away their data because they grew up in that environment from so early on. So if you are able to position Bitcoin and crypto back into that movement of like a populist energy, then I think you will imbue a sense of belonging for that generation. But right now, what's happened is the complete opposite. We're seeing kind of people generally seeing the Wall Streetification of Bitcoin to be like inside dealings and self-serving. And you don't want to see like the billionaire class make more money using Bitcoin, right? Like there's always a part of me that's like, oh yes, I love that Ray Dalio supporting Bitcoin or whatever. But there's also the other part where like, I kind of don't know if I want him to be then the spokesperson of Bitcoin, because that's really not going to appeal to Gen Alpha.
Have you seen the clip of Peter Thiel, and I think it's Andrew Ross Sorkin on stage? And Sorkin basically asks him, what's your view on Bitcoin or whatever. And Thiel goes on a kind of explanation, and he says that he doesn't have as strong of a conviction in the future of Bitcoin. And one of the reasons he points to is because he feels like Bitcoin may have been co-opted by BlackRock. And his whole point is kind of like this cypherpunk money thing. It's now becoming something else. And once it becomes financialized, he doesn't ever talk about like the return as much and is like kind of orbed away. But he essentially is saying that because he, in one hand, says, hey, the upside, may not be what people think it is. And then he's talking about this co-opting by, these financial firms. Is he right? Yeah,
well, there's two co-ops, right? Because on one hand, yes, you have a co-op by Wall Street and you have a co-op by political administration, for sure. And then the other co-op I would say is actually even within the native Bitcoin community, where that energy has thus far being channeled for what it means to be a maxi in the Bitcoin language. Like right now, the things that people are arguing about with Bitcoin development when it comes to spam filters and now the debatable hard fork that is to come with BIP 444 are sometimes truly like extreme things that are happening at the ideological level that is unrelatable to almost most Bitcoiners. I don't know how closely you've been following, but a lot of these arguments come down to really inane things. And it's actually very, very like upsetting at some level to see Bitcoin get to that point where Bitcoiners are weaponizing kind of like legal capabilities to motivate one of their causes versus another group. And so right now, this whole thing with like how we need to make sure that the content moderation on Bitcoin is enforceable so that we don't end up in illegal territory when it comes to certain spam that can end up on chain, becoming made into an issue that was never an issue really in the past, knowing of course, like these things were always going to be the case. That's why Bitcoin is cypherpunk money. That's why there is a concept of free speech embedded within Bitcoin. But to see Bitcoiners like weaponize against each other, that's another co-opt that is happening on another extreme right-wing level within the Bitcoin community. So actually you got the two loudest voices, right? One is this extreme right-wing group almost within the Bitcoin community. And then you got basically the like mother of all centralized like risks that could exist within institutional power. And so, what can you do? And I think both of those have been pretty insufferable. All that said, like, I am optimistic that we'll get through it because Bitcoin always gets through it, right? People who've lived through these cycles and the block size war know this is part of the journey of Bitcoin adoption. And these pendulums can sometimes swing too far. And then we just have to, over time self-correct itself. But the one thing that I do wish for and watch carefully nonetheless is young people. Because if you lose young people's interest in Bitcoin, and I really think this is the first cycle that I've seen it most explicitly. And I can't quite put a finger on it, whether it's related to the ETF launch itself, because the on-chain footprint itself has now become a little bit harder to monitor. But it is a pivotal time in acknowledging that one thing has changed in how we're able to see that participational group.
Today's episode is brought to you by Core. You can earn yield on your Bitcoin by just holding your Bitcoin. It's simple. Core, the leading Bitcoin scaling solution, will reward you for not selling your Bitcoin. It's not magic. Here's how it works. Core is a protocol secured by elected validators. You can help elect validators and secure the network by simply locking up your Bitcoin on the Bitcoin blockchain. No bridging, no lending, and just holding. When your validator secures Core, it earns rewards fueled by network activity and passes them back to you as yield. With a minimum lockup of just 1 day, when the time lock ends, you get your Bitcoin back untouched. Still your keys, still your coins, now your yield. For even higher rates, stake Core alongside your Bitcoin and multiply your yield. And if you want to see what your Bitcoin is securing, join millions of others in exploring the largest Bitcoin DeFi ecosystem. There are over 100 live apps in the network and the deepest liquidity in all of Bitcoin DeFi. Get off zero and start earning yield on even just 1% of your Bitcoin by going to stake.coredao.org/pomp. Again, that's stake.coredao.org/pomp, or go click the link in the description. Maybe the greatest paradox in the world is young people coming into question is how much they like Bitcoin, and the Treasury Secretary tweeting about Bitcoin explicitly, not sound money or just explicitly tweeting about Bitcoin, and doing it in the same way that maybe your favorite Bitcoin Maxi account could tweet something, and it's just copy paste, put it on the Treasury Secretary and send it out.
Yeah.
What was your take on that?
Well, I think, we all grow up, right? So we have to also remember 10 years ago, I was a different age. And so we all grew up and we've all become older, and we grew up with a community, right? As Bitcoin turns older, we're all aging as a cohort. And so it makes sense that the person who was in their 20s is now in their 30s, and they're able to kind of graduate that conversation. And then, but the question is, who is coming in to be the spokesperson in their 20s, right? Who is that person? Who is the Kobe of the 20s, right? And you don't see enough.
Kobe with a C.
Kobe with a C, yeah. Kobe of Coinbase Kobe now. Coinbase Kobe.
Coinbase Kobe.
Coinbase Kobe.
Never would have thought we'd hear that.
So, isn't that a prime example already of where crypto's come? And so I'm always on the lookout for who is that inspirational 20-year-old that will come talk about Bitcoin in that authentic way to appeal to that crowd. Now, there are some crypto protocols that have done a good job on this. For example, Ripple. I am always blown away by how many young people still talk about Ripple, and they have this incredible hold over this younger demographics, because their social media campaign just seems to be very strong in developing and fueling that fan base. If you go on TikTok, it's almost like Ripple channel, and there's a lot of young people who fervently believe in the strength of this community and push for it. And at a global level too, outside the US, there's young people around the world that really care about Ripple. South Korea is a prime example. Lots of Koreans love Ripple.
Why?
And young people too. It's just a mimetic thing that somehow worked. And I think there's just more people coming into it where it's evolving with its time. Bitcoin sometimes though feels a little bit stuck in its aging, where yes, we're growing up. Yes, we're getting Bitcoin treasury companies and we're getting Larry Fink, but why are we not seeing more kind of, tech forward young folks thinking about Bitcoin layer 2s and side chains and trying to solve these serious problems more coming from the other side, right? And there's a bit of a dearth in that funnel.
I remember in this probably 2018, 2019, somewhere in that time frame, I was in Kuwait, and I was speaking at a conference there, and I kept having a bunch of guys come up to me. They kept asking me about XRP and Ripple, and I'm being like, dude, what is going on here? Do you guys work for them or something? What is this? And finally, one of the guys pulled me aside. He ran a family office in the Middle East, and he was like, "No, you don't understand. Culturally, the banks always win, and this we see this as the bank coin." And I remember just being like, oh my God, it makes so much sense once you understand the cultural, kind of understanding and general consensus of just there is no attack the banks. There's no fintech, and you know what I mean? It is a rigged game. The banks always win, and they are blessed by the state. And so if you have a coin that is blessed, with the banks by the state, that's obviously going to be the winner.
Right.
And I remember just being like, man, this global game, by the way, I just got a crash course in, the Middle East and specifically in Kuwait, there's a bunch of different ways people are going to look at not only Bitcoin, but all these other coins. And that I think was one of the formative moments where I realized you cannot just pay attention to the United States. You have to look at this globally. And to your point, whether it's South Korea, Kuwait, anywhere else, there's just these narratives that take hold, and I think people get very gravitating towards them.
Yeah, totally. And I think there is a little bit of this unit account bias too, where like, it doesn't make any sense. Any proportional ownership you own in anything, you should feel like it's going to be like worthwhile for your investing effort. But for some reason,
it's 10 cents today. It could become 100,000 like Bitcoin.
Yeah, it's kind of, but you know what? Like I remember having a shocking experience a year ago when, at Bitwise, we had these income strategies and they're yield generating strategies by selling vol. And it of course trades at a par price, and people would actually comment on the price, the dollar price of that per share being rich or cheap based on some of our competitors' products, as if that was like in itself a constraint. Like if our competitor had it listed at $25 and ours was $50, for some reason, it felt like ours was more expensive to them, even though we all know it's the same thing. It's just like a unit count conversation. And yet like, there is that like retail investors have this element where the dollar price matters. I don't know why, but like it is part of like why people do stock splits, right? And the stock goes up after stock splits. So Bitcoin has a little bit of that dynamic too, where the 100K can feel really great for institutions because it's like, wow, we've made it. Like we now have so much liquidity where real money can participate. But on the flip side of this is the downside of younger folks, for whatever reason, feeling like 100K, like I can't afford that. And you can say, you don't have to buy whole Bitcoin. You can just buy 0.1 Bitcoin. You're like, I don't want 0.1 anything.
Yeah. What's interesting is at 100K, I think psychologically the next milestone's $1 million. Mm-hmm. That is 10x. Mm-hmm. That actually is not interesting to a lot of people, which sounds crazy. Like if we go talk to like the Buffett disciples, or they're like 10x, like, we've only done that for over the last 30 years.
Right.
But I do think that my youngest brother, I've talked about it before, he told me this in 21. I should have known to sell everything when he told me this. He's like, all my friends, they don't invest unless they think they can get 10x in like a year or something. Like whatever the thing was he told me. And so if you look at it like, okay, well, when do I think Bitcoin's going to hit $1 million? Then actually that's like not that interesting to them. Mm-hmm. Right? If you say, hey, it's going to take 7 years. They're like, yeah, but like, Palantir just announced earnings and like that might double in the next 12 months.
Right. Never mind. It's the richest stock in the index at 300 times earnings, but doesn't matter.
Sorry, I didn't understand what you were saying. That's a different language. Like it's going to double, right? But like that is kind of the logic. It's like, it's not about where is it today. It's all about like, what's the upside,
right?
And so I always try to be careful because we are making some generalizations, but I do think that there's a lot of truth in this. And there's always going to be people who are really smart and then people who just like are, vibe investing, whatever. But it does feel like younger people in particular, they feel like they're behind. They feel like they have to do something that is extreme or accelerated to kind of get ahead, to, catch up. And the thing that is kind of the steady Eddie, that's not as a coach used to tell me, steady Eddie ain't as interesting as Fast Freddy.
Everyone loves Fast Freddy.
Yeah, Fast Freddy. Everyone wants to be his friend, right?
Yeah.
So if you think about it from that standpoint, it is kind of a weird dynamic, right?
It is. And Bitcoin, unfortunately, has the curse and luxury of being both a risk on and a risk off asset at the same time, which is such a rare trait. I tweeted 2 weeks ago that Bitcoin will make new highs once two things happen. And it was kind of a joke because these are joke numbers in crypto. But like I said, S&P has to cross 6,900 and simultaneously gold has to hit 4,200. And both of them have to sustain those levels for Bitcoin to rip. And what's implied there is not only do you need crazy risk on views on the S&P, which is inflationary, but you also need this risk off mood with gold. And those two things simultaneously have to happen for Bitcoin to work. And they're completely antithetical. And actually what happened is neither of them were able to break it in together. Independently, they did. Once upon a time, like a month ago, gold did hit actually above 4,200, but S&P wasn't there. And then S&P hit 6,900 and gold came back in. And the key is, when are they both going to hit it? That's when Bitcoin's going to work, because that's consensus on there being other factors at play in which I think people are going to express this conflation of risk on and risk off as the engine through Bitcoin, which I think tends to be related to, as people have already hinted, to global liquidity. But I really do think some of it is going to come down to there being real institutional demand for buying. If we think that there's going to be continued incessant selling from the larger Bitcoin investors.
Now, when there's some sort of injury and people run over and they check the pulse, just make sure they're breathing, right? And then we can kind of figure out what to do. Whenever people are a little bit more calm, cool, and collected and not as exuberant on the podcast, I always got to do the pulse check. Are you still excited about Bitcoin? Do you still think that it's got a bright future, or has even maybe that changed?
I'm definitely excited about Bitcoin, but I am rethinking about the time frame in which we're going to hit newer highs. I definitely thought by October, November, we would kind of find momentum to get there. And a large part of it, to be honest, did rely on that there being a structural bid for buyers to step in. Some of it being, of course, through the advisor channel and the ETF, but also in Bitcoin treasuries. And we've seen weakness in the Bitcoin treasury arena for some time now. So that structural bid has changed from what I anticipated back in June, May of this year. At some point, though, you also wonder if the selling pressure in itself would come to some halt, and that would also then be allowed to let Bitcoin prosper a little bit higher. And we just haven't seen that either. So the third lever, which we just don't know, is how much of the continued selling are we going to see from those who have owned Bitcoin at large size for a long period of time? The other thing that we just can't know for certain by on-chain footprints, but is really important, is not just, are these whales selling? We know they are selling, but what percentage of their Bitcoin are they actually selling relative to what they still own, right? Mm-hmm. Because anecdotally, you're starting to see some people who are actually all out, I'm done. I'm selling 95% and then the rest is gravy, but I'm out now. And you don't want that. And so this idea that somehow people were waiting for 10 years and then all of a sudden decided after 10 years, I'm finally now going to sell and get liquidity for lifestyle needs. That's never sat correctly with me, because if you look at, again, the on-chain footprint, they've constantly been selling. This isn't new. They just didn't wake up one day and said, oh, at 100K, I'm going to sell all my Bitcoin. Mm-hmm. But the question is well, how much skin do they have left in the game? Because if you start seeing more deterioration there where they're completely out, that's a different sign, Bitcoin count of selling pressure aside, than the actual lack of participation by those original investors. And I watched that group also really carefully, because the original group of investors were the same crazy people who 10 years ago, maybe more than 10 years ago, saw something as an opportunity when everybody was saying, that's not true. These are non-consensus, improbable, existential views at that point if you were buying Bitcoin in 2010, 2011, 2012. So they were crazies. Well, if they're selling, they must then also being of the same improbable and non-consensus and existential risks that Bitcoin might be having if they're all out, right? And so we have to know, are you all out? And then is it because of these existential risks that we're seeing in quantum? Is it because we're seeing things in AI that is more interesting, that is actually going to compete for Bitcoin for capital? Is it because there's privacy issues that hasn't been addressed, especially if you're an offshore Chinese investor? Is it because, Lightning Network never materialized, so Bitcoin's actually having a fundamental economic model issue where the block subsidy eventually will run out, and so it's not viable when that breaks? There are some real questions there. And since the block size war, we've come enough time where I think people would have anticipated more development for what Bitcoin could be still now versus what it was back in 2018. And that part too could be a thing to investigate a little bit further.
Where can we send people to find you on the internet?
Find me on Twitter. My handle is DGT10011. And you can also find my Substack there for some deeper reads.
I got a feeling you're going to come out with a big piece soon. That's my hope, at least. I don't know if that's true, but we're going to find out. All right. Thanks for doing it. We'll do it again next week.